Okay, another win on this beautiful Tuesday morning. I'm going to call this the trust fund trade win. And the reason is because this trade didn't fully earn its win. And I'm going to explain that in a moment. So you can see here are my executions. Nice 90-point trade to start or to continue on the week. Let's jump over here. So what happened today? It's a lot of fake outs this morning, and we avoided all of them because we are not pattern traders. So coming into the day, we had this really nice data low sitting right here. And this was a clear target of liquidity, right? But we opened and we just chopped. And so there was really no entry for me to be able to target this data low, even though I called it as an obvious draw on liquidity, even though we were in OTE of this range here, delivering out of this 15-minute, we really hadn't swept any meaningful liquidity, right? Like, where's my sweep to say, all right, we've captured enough stop losses to start moving down? It's really not here. So just because I have a bias that we're going to go short doesn't mean I can enter without conviction and without strong reasoning. And so sure enough, played out perfectly, came straight down for those data lows. That's okay. We don't have to be part of every play. We didn't get our entry. And we put an SMT here. And right after we put in that SMT, we invert this 1 minute gap here, right? So we've swept lows. We swept out of lows, we put in an SMT. We are delivering out of this higher time frame here. A lot of traders are going to enter and target these London highs. Well, that's a pattern trade. Why is it a pattern trade? Because you don't have a change in the state of delivery. Because you've been flushing, and this is the first opportunity to potentially go long. It's inducement, classic inducement. So what happens? Everyone who went long there gets absolutely wrecked. Okay, great. We avoided a first loss. That's a huge thing. Avoiding loss is just as important as taking winners. Okay, second opportunity shows up. What do we see? Now, we still have an SMT here. And now we've taken London and Asia. Even more liquidity has been run. And we have a singular fair value gap inversion. And we have strong displacement through this area here. It is still inducement. This is still a pattern trade. If you are an IFVG trader and you took this today, you are a pattern trader who doesn't understand the markets. Please, I don't mean to say that to hurt you, but you have to understand that trading fair value gaps like this is killing your accounts. It's the reason why you continue to blow accounts. You've been told IFVGs are this golden chalice of trading where if you can just read them right, that you can bank all this money. But IFVG traders do not show their P&L. IFVG traders do not trade transparently. There's a reason for that. They do not work in a vacuum. And so what happens here? IFVG traders get absolutely wrecked. So then what happens? I called out, I said, what I want to see is an internal sweep of liquidity. We need to knock out some internal liquidity and generate some kind of market structure, right? That's exactly what happened here. Now we have some liquidity that's been generated as we've faked out all of these pattern traders. And now, for the first time, we've got a change in the state of delivery right here. This series of candles that led into this internal sweep gets closed above. Now, this is where it becomes a trust fund trade. Why am I calling it a trust fund trade? Because for the confirmation model to be valid, we need a sweep of liquidity, right? We've swept London, we've swept Asia, fantastic. We have an internal liquidity sweep. We have to be delivering out of a higher time frame, which we are. We're delivering out of all of these fair value gaps here. We need a fair value gap inversion and a change in the state of delivery. Well, we do not have a fair value gap inversion. The reason these fair value gap inversions are so important is because they show that buyers are stepping in, pushing through opposing liquidity, that they're so strong they're able to absorb all of these sell orders, push through, and give us a change in market structure, change in the state of delivery. Without this here, it's a trust fund trade because it didn't have to earn its change in the state of delivery. It didn't have to fight through opposing order flow. Its daddy trade was like, here you go, son. Here's a nice change in the state of delivery for you. Have fun. We didn't see it have to fight through the trials and tribulations of its peers who weren't born with a silver spoon in its mouth, right? So that is a trust fund change in the state of delivery. So I went small on size because we still had everything else aligned, right? Higher time frame. We've swept all this liquidity. Higher time frame, fair value gap delivery. Get a change in the state of delivery. Clearly have liquidity, opposing liquidity up, and we've been in this huge bullish trend. So this to me looked like we just wanted to knock out all of these players who went long early so that the real move can happen. And so we entered right here. Stop at the low, targeting London highs. I ended up, look at this, and look at that efficiency. It's so beautiful. I ended up exiting right here. I put my stop here because the markets have been really wily lately. And I have just been seeing a lot of moves happen where they come within a tick of liquidity and then reverse and do the same thing, and the chop continues. And so for me, I would much rather capture 90 points, right, than capture 100, but potentially miss out on the whole play. Because the last thing I want to do is see this move come up here and then drop all the way down, killing a beautiful move. So I cut it out a little early, but profits are profits, and this was certainly a nice 90-point play. Is nothing to scoff at. So hopefully you had a good morning. If you are struggling with pattern trading, if you are struggling with understanding where fair value gaps are valid and meaningful versus where they are just inducement, I highly encourage you, come check out my free trading. You get 7 days, explore it, ask me questions, see me live on the charts, see how I take trades, see how I patiently do not take trades when things like inducement show up, and level up your trading. All right, have a great Tuesday, everybody.